Amid rising geopolitical instability and increasingly systemic extreme weather events, the demand for clear, actionable insight on climate risk has never been more urgent. Investors need to cut through the noise to gain the clarity and foresight required for informed climate-resilient decision-making. We are also at a critical moment in global climate cooperation. Newly announced climate targets, the so-called NDCs 3.0, mark a significant shift in ambition, with implications for transition risk. In our COP30 Net Zero Atlas, we assess these new commitments and what they mean for G20 economies, and the feasibility of the Paris Agreement's goal to limit warming to well below 2 degrees. Our analysis finds that announced 2035 targets point to an acceleration in decarbonisation post-2030, driven by emissions peaking in key emerging G20 economies and continued emission cuts in developed economies. Despite this, we are still off track for the Paris Agreement goal of limiting global temperature rise to below 2 degrees, with our analysis showing that these new commitments align with a 2.2 to 2.3 degrees of warming. Ambition levels are uneven across the G20, with emission trajectories for France and the UK closest to the Paris Agreement's 1.5 degree goal, Japan and Brazil aligning with below 2 degrees, and Australia, China, the US and Canada remaining well above 2 degrees. You can discover the full Net Zero Atlas and dig into both climate-related transition and physical risk analysis on lseg.com.